This week, Cboe launches new equity index products, FIA hits record volumes, and the SEC opens its internship program. This is Alex Perry with John Lothian News, and this is your recap of options and market news from the week. Here are some of the week's top stories. Cboe Global Markets announced that it's launching new equity index futures and options products on the Cboe Europe Derivatives exchange, or CEDX, toward the end of the month. CEDX, Cboe's Amsterdam-based equity derivatives exchange, will launch futures and options on 4 additional Cboe Europe single country benchmarks: the Cboe Italy 40, Cboe Norway 25, Cboe Spain 35, and Cboe Sweden 30. Cboe says that adding these new products will bring the total number of products available for trading on CEDX to 20. The products will be available for trading starting April 27th. The CME Group has issued a statement regarding its all-or-none transactions. In its market regulation advisory notice, the exchange said that the notice, quote, is being issued to enable all or none, or AON, transactions for open outcry trading of options on 3-month SOFR futures, options on 1-month SOFR futures, and all options on 3-month Eurodollar futures. The advisory notice is pending CFTC regulatory review and will be effective on May 2nd, 2022. The FIA has released its volume and open interest numbers for March 2022. The report included data on its worldwide volume of exchange-traded derivatives of 6.85 billion contracts in the month of March, the highest monthly total ever recorded. The total March ETD options volume was 4.2 billion contracts. The FIA notes that its March total was up 10% from February 2022 and up 23% from March 2021. Citadel Securities is shelling out the big bucks. In fact, it spent $2.6 billion for payment for order flow, or PFOF, in 2020 and 2021, with well over half being spent on options. This was the most any market maker spent for payment for order flow in those 2 years. According to the trade, quote, equities makes up a small portion of PFOF, accounting for around $877.5 million of Citadel Securities spend, with $1.7 billion of its $2.6 billion spent on options flow. Your favorite streaming service is facing some setbacks. Netflix stocks plunged a whopping 37% Wednesday morning after losing around 200,000 customers in the first quarter. Netflix is bracing for the worst as the streaming giant expects to lose another 2 million customers in the current quarter, according to Bloomberg Law. CNBC said that Netflix blames the drop on, quote, competition and easing pandemic restrictions, and the Washington Post said that it was partly due to Netflix pulling out of Russia. It was also reported that other streaming services like Disney, Roku, and Paramount took a dive. Lastly, the SEC is accepting applications for its SEC Scholars Program, which will begin in the fall. The paid internship is 10 weeks long and is open to enrolled undergraduate and graduate students. The program offers student trainee positions in law and program support and is set to start on August 29th. The application deadline is April 22nd. That's all for now, but be sure to tune into this week's edition of John's Take. Also, be sure to check out our options term of the week presented by Euronext. And just a friendly reminder that the 40th Annual Options Industry Conference is fast approaching and will be held on May 10th through the 12th in San Antonio, Texas. This has been Alex Perry for JLN. Thanks, and we'll see you next time.